All right, good evening, guys. It is Ken at Tortoise Capital. This is the nightly strategy podcast for May 21, 2020. In your handout section there's a copy of today's daily report, and that's already posted at Patreon for you as well. And then there's also an updated job book, which we saw the rough draft on yesterday. So I cleaned that up and put it on 2 pages so it's actually usable. And that's really getting all of the key topics for the advanced hybrid trading workshop on 2 pages. And those would be the concepts and processes and patterns that I'll be emphasizing for that specific workshop. We picked up another 5 or 6 new folks today, so I've got to get them enrolled. Really, I think probably the next 10 days, I'm really going to be focusing on getting that set up as good as it can be, and hopefully it will benefit all of us. I should start off by saying yesterday I sent out a note on Patreon into the gang of 7 interns who've been beavering away at the Cornell note sheets for various parts of that hybrid trading course, and they are doing just a fantastic job. And I just turned them loose on the course number 104, and that's the coronavirus live trading strategy podcast course. And so we started that on March 5th, and that's really these daily podcasts, and there's 2 forms of that. There are closure and market reports, which on many days, that is really just me right at the close, looking at how the market closed, what the symbols were, a quick look at what worked and didn't work that way. And about half the time I've been getting those done like right at the close and posted. And then there's about either a 1 to 2 hour strategy podcast in which I then read the reports and go through some ideas, but I've been adding ideas on techniques and larger concepts to consider, not tied so much to the trade of the day, but really much more about technique. And then most of those include some live case studies where we've been going bar by bar and practicing some of our trade techniques per se, using the charts of the day. Well, as I was thinking about it last night, I was watching some documentary about the Battle of Midway from World War II, and I was just thinking, man, I've gotten so close to the podcast that it's part of my normal routine, but I just realized that what we have there is about a 3-month piece of history where we have been doing this advanced hybrid trading, from the start of March, and lived through a 40% sell-off, and then an amazing recovery, and with all of the points in between, with all the politics and the social restrictions, and when you're inside history, sometimes you forget that history is being made, and you got to remember that's a once in a generation kind of event. And I think what we've seen is that the hybrid trading has given us a fighting chance of coming through this thing thriving, not just protecting against losses and seizing the opportunities here and there, but having a systematic way to adapt and respond. It got us into cash pretty quick. It allowed us to exploit moves to the downside pretty reliably and aggressively. It allowed us to pick the turning point tentatively, and then reinforce that opinion with facts as it climbed rapidly out of that hole, and allowed us to adapt into some really good positions on the first leg, then the second leg, and what is this grinding third leg that we're currently enduring. And all along the way, we've been developing the intraday, the swing, the position, and the core trades that have given us the ability to manage an entire portfolio with multiple time lenses. And, there's about I was counting up. There's over 200 hours of lessons and narratives inside there. And so if you're just walking into this thing, that could be kind of daunting to fight your way through all that. So the gang of 7 interns have cut their teeth pretty nicely on a bunch of previously constructed course material, and they've really demonstrated that they can synthesize that, break out the key concepts, put crucial notes in there, and do it at a consistently high level. So I asked them to now turn their attention to those 3 months of the podcasts, and asked them to take 2 weeks each, a 2 week period, and go through and then construct not only a Cornell note sheet for each lesson, but a timeline for each podcast, so that we could see almost like a Grateful Dead live concert. And each one of those podcasts is a collection of songs and lessons of various lengths. So I've asked them to put together a consolidated timeline for each month. So, by day, by selection, so that we can consult an index and then quickly dial into the lesson that we want to emphasize if we're a student, right? And then that'll be the basis for, in the second round of this, extracting out those individual lessons that seem to be high priority, and then constructing those into really tight playlist in a separate course that then groups them by content and allows us to unpack what has been this stream of consciousness. And so it's not just a 200 hours of suffering, but it allows us to get the most out of this. So, I'm thinking about this, like from 5 years in the future, people could look back at this and say, oh, well, how do all these techniques work when you have these extraordinary events? Well, we've got some living history that we've built together through this podcast with your excellent questions and kind attention and motivating me to get this stuff documented. So there's a piece of living history right there that's going to be part of the home study course for the hybrid trading, and will probably support a number of other courses that'll break out. Folks that have the that top level Patreon subscription will have access to that course as part of the library card for all the Common Core courses. There will be a few courses in that library that are separate and functional, that some other authors have contributed with my help, like the Forex and the options, and then a couple other courses that I've got in mind. Those are going to be a la carte because they're kind of specialty. So a guy would be able to just get the specialty course a la carte, and study it for 6 months or a year, whatever's fair, without having to buy the whole Patreon package. But to me, the top level library card for Patreon access is a pretty good deal, and it's really going to grow in power as we go. And it's only going to get better. The price will never go down, and the price is frozen right now at $400 a month until 1 September, when it's going to go up at least to $500. That's probably the next price level once we get through this virus crap. But our soccer season is getting ready to open up. We've got a timeline now to go back to work at the military college. So we're kind of getting into that phase 2 and closer to the end and the start of of what I think is just a moment in history. And so it really just kind of hit me in the face like a wet fish yesterday that I needed to do something special to make sure that we could get the most out of this material that we have collaboratively put together. So anyway, the Gang of 7 is beavering away at that, and I'll be making that available to you guys for playing along. So +1 to them for working hard. They are suffering, as you well know. So that's that. Let's go ahead and jump into the review of the daily market health check. And so we'll start in the usual way, and that is by trace the outlines of the 10-day trading range. So here's that 10-day. Here's today's high and low. There was it basically had a zero gap, fought its way north for a little bit, and then kind of ground the rest of the day down and then closed in the lower third. So not a convincing follow-through day on a Thursday. That really sets up tomorrow as the day prior to a long weekend to really see what kind of week we're going to end up with. I mean, we've been able to hold this gap up from Monday, but the follow through really didn't get beyond that long term fair value at 298, and it closed weekly. So we'll see how much gas is left in the tank for tomorrow. I would be least surprised by a sell off that finished somewhere here inside the Dragon. But it's possible there could be some guys that are willing to hold positions over the long weekend in anticipation of good news over the weekend and a gap up on Tuesday. That's a lower probability event to me. So I'll be playing the day tomorrow very close to the vest. Probably not carry swing positions over that weekend at all. I'll be looking to get out of them mostly tomorrow, unless something just dramatic happens. But that's my default position. So made a run at the 10-day high, like I said, which is also now the fair value and Z2. So this price level here at about 298 is simultaneously the daily high, the Z2, the fair value, the 10-day high, and the 30-day high all at once. So that's a pretty strong resistance level. And if it can break through that, then there's really nothing that slows it down all the way up till 303 and some change at the Z3 excursion. So if it does break out, there's room for this thing to really go. That would be the most surprising effect tomorrow. Looking back 10 days, down to the 10-day low, which was 6 days ago. We've had a nice recovery and hold since then. We've got a Dragon that is sloping up nicely. He's recovered pretty well. The PSAR flipped back and is now starting to accelerate a little bit and is sloping up. That's favorable. So there's our PSAR stop here at about 287, and that's sloping up. And then the RL30 has rolled back up and is sloping upwards, so that's the RL30 extension. So all three of those extensions look favorable, and all of the price is on the north side of that and has been so for 4 days. So I treat that as very favorable. You can see our straight line 10-period regression line is a positive slope, and price closed just a fraction above that long-term fair value, right, or that the trader's price at fair value. You can see where the RL10 has come to here, and everything is north of the Dragon, so that's good. Support to the downside, these act as price targets. If the support levels crack, then each next one becomes a support level. But these are all things that are trying to prevent it from coming back to the bear. So there's the low of the day. There is the peak of the Dragon here at about 293. There's the Z1 edge of the river at 291.5. The spine of the Dragon, the belly of the Dragon here, the Dragon bottom at 298. The PSAR stop today right around 287, and it'll be right about there tomorrow. The Bollinger Band mean back at 285.4. The Dragon belly from the previous sell-off, excuse me, got as low as 284. I would also say the PSAR stop is pretty much equal to the previous belly of the RL10, so that's pretty strong. Z-1, a 10-day low. This is a previous RL10 belly way back here, and then Z-2. So plenty of support levels to hold this market up all the way down. I really think the Z1 edge of the river is the one that really matters right now, is because that would represent a new weekly low, and it would be breaking down below the low of the opening of Monday. So this one, I think it needs to really just stay north of the Dragon for us to maintain positivity. To the upside, as I've said, it's really just this cluster of resistance at about 296, and then it's free and clear all the way up to 303. We remain in the fall, and we're very close to the zero line, so it doesn't take much for this to tip over. I think a breakdown out of the dragon would be what it takes to drop this into the fall, where we would pick up a short side bias. So that's what we got right now. I might even go as far as like belly of the dragon and the Bollinger Band meet. So I think really, essentially, as long as it's north of that, we can maintain this tentative long side bias that we've adopted. Okay. So that's what that looks like. I would also just point out, hey, I just downloaded and installed that TC2000 version 20, and with Danny's wizardry, he was able to figure out how to color code the RL10 to reflect the MACD histogram 4 seasons. So this is flat amazing. You're going to see it when we do the speed run. But when it was here in the summertime, that RL10 is showing as green, and this is where it picked up the fall. And so it's been in the fall this entire period, and it's in the blue. If we were to look at, let me try to find one in here. Yeah, so when we look at the life cycle now of the market health check on a longer look back period, look how visually appealing this thing is now. So when we had this long piece of winter, this entire winter season in MACD histogram, and it became spring right about here. Well, we treat the RL10 as the smoothed price, the actual price, and that the bars are noise. And so when you're trying to get a flavor of the season and the price trend, and that just jumps out and hits you, that it's winter this whole time, and then right here is where that picks up the spring. And then the spring value on the RL10 now reflects yellow. So you can't even avoid noticing what season we're in. And so then it picks up the summertime right here. And now you have this summertime move. Now you have this fall sideways chop. And really these last 4 days are making a strong pitch that if it can get north of this very solid support level that we looked at, or resistance level, I should say, and gets up around Z3, well then it's pretty soon we're back to the previous Z3 excursion on the downside, and then we're back up to peak of the dragon and peak of the RL10, and then it's as if this had never happened. So I want you to just see the real power that there is in this version 20 of TC2000, and that's all. He's got it updated. He's in our bundle as well, and he just made a video on the website there at klbundle.com that shows all of the improvements to that bundle, which are free to the people who have already gotten it. Just got to download it and apply it. That's a lifetime, one-time purchase. So that bundle is just getting better, and that, like I said, that's the best question I asked of him lately, was could he color code those that RL10. I just find it amazing. So I wanted to share that with you. Yeah, I think at this longer look back period, now you can see if it can break out of this cluster of resistance right here. I mean, there's nothing that holds it back from here. This was the last time it put it to the test, and then it collapsed into this big sell, and now it's fought its way all the way back up here. It took twice as long to come out of this hole as it did to sell off that distance, because fear is more powerful than greed. But this is making a pretty strong play to go summer, fall, and then pick up the summer again, and then that could be a really nice move, like one of these legs here would be the next breakout once it breaks through that. I still think that's less likely than a retracement, but That's what the chart's looking like. We are clearly in a um, critical state here. Is this range is now compressing this whole week pretty tightly. Let's take a look at what worked today. Okay, so here we are at SPY at minus 0.7. And what was better? Let's just look for some indexes first. There's lumber, finance. The Dow was a little better at minus 0.3. Real estate minus 0.2, 0.15. Mexico slightly positive. Aussie dollar. The Russell small cap was favorable. Treasuries. Simon Property. Here's our tech leaders: Facebook, Twitter, Google, all better than the market. At the top of the stack, Brazil continuing its nice move. We got a nice swing on that one working. Home Depot started to make its turnaround. We talked about buying quality on sale yesterday, and both Walmart and Home Depot were on our list of previously very strong companies, but which had recently been underperforming. So we got our watchful eye on that, and they both turned in better days than the S&P. So maybe that's the beginning of some relative strength. Merck was the other one that we looked at that got smashed compared to the peer group, and it was fractionally better than the S&P. What was worse in the S&P? A lot of things. Healthcare, Alcoa, clean energy, basic materials, more weakness in Virgin Galactic, Chevron, the energy complex with Chevron and Devon. Japan, emerging markets, Eurasia, tech, energy, all of these were underperforming. We had looked at Intel as a potential play. It did not follow through today. Cisco, Intel, Amazon, all disappointed. I think we got to watch those as opportunity plays, because when they sell off sharply like that, I'm thinking that is more likely to attract buyers than to signal that they're suffering. I mean, they still all three are in dominant positions, so I take that as moving closer to a buying opportunity. And you'll see in the case of Cisco and Intel, at least, that they're both in the daily summer. So this little pullback is really still just noise and is an opportunity to frame some buys. So I'll be watching them for that reason. Wheat and precious metals, Win, U.S. Steel, all suffered today. So the volatility on this is not anywhere near what we saw last week, which, the most extreme performers were winning and losing twice these numbers. So this is a market that is starting to grind, and that sideways, as we've seen over the last 4 days, is starting to be the case. I want to go to the speed run now. We'll see if this is going to cooperate. Yay, it does. So now we're evaluating our symbols of interest on daily charts, and we're taking a look at our posture here. So this always the furthest dot to the right is going to reflect if we have a position or if we're stalking. So if it's in the yellow, we're stalking. And for those of you that are joining us for the first time, a yellow box is usually just a reference box, or in some of these, in this case, this is a short position we set up. The orange dot says that we were playing this as a turbo trade, and we were going to play it in either direction. and follow the breakout. In this case, it broke to the downside, so we got short here. And then the green box reflects that when we exited, that was the gain. The green boxes are our captures compared to the yellow box of risk. And then now we're back to a yellow dot, meaning that we're just stalking this guy. And again, you'll notice that the MACD histogram has been in the winter, so there hasn't been a burning urgency to get back into this on a swing. But really, if it puts in another good day, then it's close enough to the zero line that could become a summertime move. It's so the winter's so close to the summer. This could go right from winter into summer in a hurry. So I would treat that as a favorable condition because we've had that RL10 bottomed out here, made a higher low over here, so there's almost that lazy W effect, and the dragon has made his turn already. So I think I'm almost ready to go. I think I am. So I'm going to bring this back over. And I think my trade frame is going to look like that. I'm ready to play that break in either direction tomorrow, and I'll use the yellow box as the width of my trail or my execution risk for the swing. I just think that is we've had two. You'll notice on here we've had the PSAR flip and 2 dots, and that tells us it's time that we should be considering getting long. Then when you add to that the MACD histogram is about ready to change over into either into late spring or early summer tomorrow, that could be a stealth play. So we'll be watching Alcoa. Apple, we're still long on this one. We're long from yesterday. We're basically flat on that trade, but we have a wide stop, and it's a tech leader, and so I'm not that concerned about the tech sell-off. The Amazon price, the Apple price has gone from the summertime big gains, and now it's gotten kind of choppy and sideways in the fall. So it's got to. We want to see a summer, summer, so it's got to get going. I would expect tomorrow could be a day where guys want to buy it while it's on sale and aren't worried about holding Apple on swing trades. I think that's a buying opportunity for portfolio managers. It's still fully valued. It's back to business as normal. So since Apple's something that everybody's got to own, why not? Why not get it before it breaks out above the all-time high over here? So fully valued, and we own some, and I'm pretty happy about that. Okay. Amazon cashed one today. So this is where we got long, and we've ridden it. Finished that day, 2 days, 3 days. Today was the 4th day, and it gapped slightly higher than the close, ran up almost to the Z2 edge of the floodplain, and then started selling off. And I said, you know what? It's Thursday. The market itself was kind of grinding and weak. So we took that extra step up instead of waiting for it to come back to where we had pegged, our alert stop below. I just I split the difference and took the cash. So slightly better than 1R, and now we're flat, and that feels pretty good going into the weekend. Aussie dollar, that's another one where we had gotten our swing from down here as the RL10 turned and held support at the Bollinger Band mean. The same, and if you go back and listen, the same place that it turned here, where we got 2 positions in and cashed that swing, we then watched this thing sell back off, hold support of the Bollinger Band mean, right where it broke out before. Played this on an intraday move, got a great entry on the way up. Put our stop in here. It opened, ran up, and then as it started selling off, that just felt like enough. And so we've cashed that, and now we're back to flat. That's two pretty good swings in the Oz right there, so I'm pretty happy about that. And talking with Eric Morrison too, who's running our Forex course, their standard practice has been not to hold those positions over weekends, especially like a long weekend. So they're looking to leverage those trades, but get out of them on the weekend. Boeing, this is one that we've been interested in it on a intraday basis, but not on a swing. It's been winter, spring, winter, and this little bit of spring getting close to break out to the upside, but it couldn't hold it. I'm still not convinced at all on Boeing. Longer term, this thing is it's been oscillating, and the amplitude is dampening. So we're getting the Z3 pinches once more. I'd like to see it continue to compress a little bit. I like the fact that it's basically come back to the Bollinger Band mean, so there's room for this thing to go. And I could be convinced next week to start the swings on this one. Let's see how it finishes tomorrow and how it opens, but I'm not going to buy this at all until Tuesday at the earliest. But if it does start breaking out on Tuesday, my stop will be down here at the belly of the dragon, which looks like pretty solid support. Caterpillar, another one where we cashed this short step of a swing. We got the long here, moved it to no lose. Yesterday it ran up. Today it gapped up, started selling off, so we took it when it came back to the open. So we got this much gain against that much risk. I feel pretty good, and I'm flat. Cliff, just observing. This is one. If I was a better man, I would have gotten the entry when it broke out of the dragon and spring, or the fall went to summer. So notice that it went summer, fall, summer. This is just one I feel like I missed. I feel like I should have had this around 450 and had a couple days in the money where it's held north of the dragon. At the same time, it's past the fair value, which has declined. And then on the other hand, it has cleared all of this price crap here. And so I'm ready to go with a breakout tomorrow. This is one I'm ready to hold over the weekend. And I'm going to play the PSAR breakout in the low of the day, and that's what my trade will look like right there. Okay. If you wanted just a wider stop and just said, hey, I just want to play it that way, there's nothing wrong with that either. That looks pretty stable and safe. Like if you wanted to commit to hold it for a week or two, that wider stop is probably reasonable. And then you could add the second half of your position in if it clears above, let's say the PSAR dot here, this original PSAR dot, then it's free and clear. So you might like if it breaks above that line, that's probably where you could add a second position. Or if you just wanted to wait and see, let it really get through there, that's fine. I'd rather get this PSAR flip, and the way I'm going to play that is with a tight stop like that, so I can get a bigger size. Cisco, this is another one where it gapped up a little bit, started running up, couldn't make a new high, disappointing. And as it came sliding back down, I wanted to keep a piece, so we got a fraction of our risk, and now we're back to flat. We missed the rest of the sell-off, and that feels pretty stable. Lumber, this is still in the fall. We're flat on it. Too close to call on this one. I think it's too close to the 10-day high to really venture onto it. This is going to be resistance here at Z2. I just don't see that. I don't see enough upside, and I'm worried about these kinds of downside spikes. So we're just gonna wait till next week on that one. Chevron, we're just flat. It's starting to stabilize. You can see the compression of the Bollinger Band line starting, and we're getting a sideways quiet channel developing. And like we were saying yesterday, this feels like we're much more just back to normal now, especially in these indexes and large caps. It's now more about the earnings than anything else. So this is this long central corridor in DIA. There's the 4 days it's been able to hold out of that, but it hasn't really had the follow through for this tiny little breakout. And then the last time that it couldn't follow through, it came all the way back into the sideways and then came all the way to the bottom. So no real compelling move yet. I would say this, though. As long as it can stay up in there, then that could be the start of a new box on the way up, almost like a Darvis box. And I'm quietly optimistic on that one. Devon Energy, just sideways on it. Emerging markets sideways. It's pulled back. We got a little piece a couple days ago. It's pulled all the way back, so we didn't miss anything by making bank. EFA's in the same position. Also, no follow through. Disappointing. Asia less Japan was stronger yesterday, but it couldn't hold it. To its credit, it is still in the summer, so this is actually in better shape than the Asia counterpart. So I'm going to go like this. The fact that it was able to hold above the dragon, mostly above the dragon right there, I feel pretty good about. So talking myself into this. That's going to be my play there. Okay. Japan, we were long. We decided to hold it yesterday instead of cashing it. That played against us as it gapped down, and so we took the money and ran. Gave back all of yesterday's extra speculation, and that was really that was half, more than half of what we had earned at some point. We gave back 60% of our maximum favorable excursion, and that's one of the costs of having a belief as opposed to just playing the numbers. I think the belief was justified. I'd do it again. I'm not disappointed in this, but you need to know that's the downside of the gains. I mean, the downside of having beliefs and sticking with them. We are flat in Mexico still. You can see by the size of the daily ranges, this thing has lots of movement. There wasn't much net difference. So again, this is a frog champion that we just start with the turbo and then and we play it by there. We've gotten back into so this was Brazil. This is the one we talked about yesterday. You may this is probably worth going back to listen to think on that longer term strategy. So what we said was Brazil has not participated in this long recovery, back towards the long term fair value like everybody else has. It's been just getting crushed. On the other hand, all of the crushing happened over here in the winter. You can see that red line. And then it had a little bit of spring, some summer, fall, back into the winter. And now winter just became spring again. But it didn't make new lows. And this long central yellow bar here just feels like an important price region. And so on that basis, we said, look, this is what an 8-to-1 reward to risk ratio looks like. We have the RL10 down here, the RL270 way up here is the long-term fair value. When you take a look at the ATR of Brazil, this was 8-to-1. And half of that was just getting to Z3. And you've got this 40-day long sideways, pretty quiet channel. And so on that basis, we said, let's take a position on this one. And we took that one on Tuesday, and we got our initial buy here on the basis of some gains we made in the turbo, and we kept a piece with a wide stop down here. And then we added a position in here, and then added another one today. So now we've made these two chunks of green, and today's little price action actually was pretty good. It gapped up and finished strong, and I'm ready to add another position swing if it breaks out above the out of the river here. So Brazil is a position that I'm holding long, and I just think that if it clears, and these were the three swing positions that we said that we would, if this is working its way all the way back to the fair value, well, then we would expect, while the trend line looks something like this, you'll recall we did this with oil as well. Then if we took like the bottom of the dragon as something like a reasonable trailing stop, as long as this price is kind of climbing north towards the long-term fair value and stays north of this, dragon support line, then we can just enjoy that. And then at each subsequent blue line, we would be adding positions paid for with market's money as it climbs this ladder. And that's how we build these swing positions. Now, in addition to that step ladder of prices for Brazil on the swing, it's a frog champion, and so intraday there's still plenty of opportunities to play something that look at the size of that move. That's a 10% intraday move from the low of the day to the high of the day, and so we can be putting the turbo on this rascal at the same time that we're carrying along these swing trades as well. So I don't mind this at all, and I think this is what a stealth swing trade looks like. And then the combination of intraday hybrid frogs, turbo, and swings on the breakout from the sideways quiet channel on the daily charts. This is exactly how core and turbo manifests as a hybrid trading strategy that combines the best of both time frames and uses the information from each time frame to support the other. So I'm liking the long in Brazil, and I also like the fact that down here, notice the PSAR flip happened today. So that's another strong piece of confidence in this thing as it's going to try to climb up the thermometer here. The one that really matters, the resistance that matters, is the top of this dragon right over here under the bouncing ball. And that really equates to the current Z2. So it really is only going to take one more day of gains for it to have cleared the statistically significant price level holding it down right now. So we'll see how that goes. Facebook, we are still long on this one. We got long yesterday. Finally, this is how stupid I am. We watched this thing go from winter, spring, summer, fall, and then it finally bought the breakout when it took out this one, finally decided to get long in here. But look how powerful and visual just color coding the Four Seasons right there on the RL10. You can't miss it. And maybe if I'd have had this back there, this is about where I should have been in. On my best day here or here, this is certainly an owl. That's an owl. And this is a pocket. That's a pocket. This is a pocket. So now, after 6 missed signals, we're finally in this sucker. And long term, it's free and clear. It's pushing all-time highs. And that's the most conservative way to get into that I guess a guy could make. But this is what the cost of having a psychological bias against the ownership group will do to you. That's the price of me getting to feel morally superior. So I'm trying to get over that. I'm trying to be a better person. I'll let you know how that goes. Gilead Sciences, we cashed the short. This is one. Again, I'm. This is the cost of having a belief about them. So we gave back this much from the maximum excursion. I finally had to just take a piece off today, but that now actually puts Gilead in a posture where it may be, um, it's at the same level where it made support before and made a grinding run. This is just not one that I think lends itself to pain-free swing trading. Look at the size of the intraday moves. I just think this is one that is better to start with a turbo and then decide if you want to hold a piece. So because this has pulled into 2 inside days in a row, I want you to just take a notice on this, right? This little triangle where we had some price consolidation 2 days in a row. This is like a coiled spring, and I'm ready to play the breakout on this one. I think I'm ready to do this now. Because I think the upside potential is all the way up here, like at the top of the dragon. So this could get to 82, and it's down around 73. So that's about a 14% move. And then the downside, the breakdown, if it breaks down here, some of these other price levels back in this area around 68 are in play. And I'm just going to put these down here as that's a breakdown. This previous Z3 excursion and the dragon, the dragon belly right here, and even the RL10 belly right there. All of those are targets on the downside, and those will also be places where I'll add to the short. So as this breaks down out of this critical state, I'll get short at that price level when it leaves the yellow box. I'll add short at 72.3, 71, and at 69 and a quarter. So I'll if it were to break down in an orderly fashion. So if you take a look at this long sell-off and then this long sell-off here. So if this sells off in an orderly way, by the time it breaks down here and comes back all the way to the belly of the dragon down here, I would have 4 positions in as it comes down to 63. So that's how I'll start small and then build in. Now on the upside, what will I do? I'll get long here. I'm just going to put the short one in so you can see that. I think skin of the dragon, I'd add one. Breaking out of the dragon. And that feels like enough because the upside will be trickier. So I'll play this break in either direction, and that's critical state trade framing right there. It's in the winter time, as you can see, but 2 days of failure to fail further, and it made higher lows, and it's getting very quiet and compressed, and it's sitting right on the long-term fair value. There's exactly nothing to fear about that anymore. It's right where it's supposed to be, and now we're going to end up buying this thing tomorrow on the button, is what I'm predicting. Google, grinding north, just watching it go. Again, I missed that one completely. Home Depot, I couldn't pull the trigger on getting short on this, and we had framed that one as a breakdown on the short side. I didn't pull the trigger because of my belief that in this strong stock, I just couldn't get short what had been the strongest member of the Dow. So we gave back maybe some tactical gains, but this is actually feeling pretty good, and it was better than the market, and it held at the PSAR, and I should have bought some today. Darn it. But I'll buy some tomorrow. and that's what this is going to look like. And I'm going to follow the follow the guidance tomorrow. It's going to look like that. A breakout there, and the stop will be like right there. So let's bring this down. We're just going to use the width of the dragon right to the PSAR as our stop. Okay. So that's what that rascal is going to look like. I will also get short it, because then the target would be, if this breaks, that PSAR chain breaks, the targets are RL 270 fair value, and then the Bollinger Band, and then the far side. So that's the, against that much risk, it's 2-to-1 just to the Bollinger Band beam. So I'm ready to go in either direction. Intel. Now, what you should be noticing, that this is like bar by bar review. You know, when we'll go do we'll do a tactical exercise later tonight, where we're looking at bar by bar on the 1 minute charts. Well, that's what we're doing here, but we're looking at 50 symbols with daily charts. So this is all feasible for swing trading, by the way. This is one where, let's see, Intel. I set this one, and I just couldn't pull the trigger today because the whole market sucked. And we had set this up as one of those. So this is a case where the not following through on it, I didn't have the will to do it, actually kept us from going into the red. So Home Depot showed why this fails, and so just choose your poison. We were set up for this thing to do the breakout, but the whole market sucked today, and it closed poorly. Intel's something I want to own long term, though, because it's still in the summertime, but it's given us a fair price value down here near the long-term fair value, so we're not chasing it. I actually kind of like this now. So what if we just say, look, if it breaks out above, we'll just buy it. So that's going to be our execution box tomorrow. If it opens inside that yellow box, whichever direction it goes, that's the way I'm going. Promise. Russell, flat and stalking, not quite as strong as the Dow. So this is really just an intraday tactical play. Real estate, stalking, it's just sideways. Z3 hasn't really pinched enough yet. Starting to become attractive, though. Look at the this PSAR acting like a suppression. It's now come in here pretty tight. The winter has reversed, not quite spring yet. Wouldn't take much for this to go. Boy, oh boy, I want to buy that. We'll give it one more day, and we'll revisit it on Tuesday. So I just noticed that I want to buy it, and thanks, Chimp. Thank you for your interest. Johnson & Johnson would have been a legitimate short today on the basis of a big laggard in the Dow, earnings disappointment. It's had its nice winter, spring, summer, fall, and there was no follow through. And now it's broken down. Tomorrow it's probably going to break through the PSAR and flip. So I'm actually ready to get short this one. And we'll play that like this tomorrow. That's basically a pocket short. And here's why. So we have the unambiguous move up. Here's the P1. Now the RLXD is the third criteria. Now the dragon is rolled over here, and the RL30 has rolled over there. So any of these would be owl short positions. The fact that this follow through didn't follow through, and it's getting ready to break through. That extra delay now makes this a tasty short. If it continues to break tomorrow, I'll treat that as an owl. And then if it breaks through fair value, the next support level's all the way down in here. This could go to 130 pretty easily. So there's plenty of downside left in this thing. McDonald's, flat, just watching it grind. When it goes into the spring, I'll be interested. Merck, ugh, God, does that look ugly? So I'm going to follow through on that one tomorrow. And I really want to be short that. God dang it. Yeah, that's what that looks like. And now you can see if it doesn't hold here, this thing is really collapsing down here. That whole healthcare sector is really just suffering right now. XLV underperformed the market too. Microsoft, on the other hand, is ready to go. And it's already back at its, as a tech leader, it's back to its pre-sell-off heights. And it's held nicely. So I think we're going to buy that one tomorrow, I'm betting. Let's see it break out. Microsoft is a clear leader. They're doing a pretty nice job of creating some capabilities for companies to use IT to leverage the new reality of social distancing and virtual work. Microsoft Teams is good. They just signed a contract with Department of Defense. We're starting to use them too. I think Microsoft's in great shape, short-term and long. Nucor, just studying. Clean energy, we're flat and studying. Pfizer, I've been stalking that through that long sideways quiet channel. It gave the first hint of a breakdown today. I couldn't pull the trigger on it. I think the other companies in this space are worse than this one. So I'm just studying this. I don't have an opinion on that yet. Man. So we'll just wait and see. Silver. This is one of those I couldn't pull the trigger. And so we've missed all of this. And then we set up our little trade frame box here. I couldn't pull the trigger again, just lacked the will. That feels overextended, but that's the long-term fair value, that purple line. I'm gonna take the signals in wheat, and I'm just using silver to study. But man, that's tough. Virgin Galactic is easier. We're short that one. We had set that up as the turbo play and got short from here, and our stop was right there, and it didn't hit that today. So now we're well into the money on this one. So we're holding this many gains right now. That's our gain in on the swing short. And that one's just got no good news anywhere to be seen. I'll add a second position short if it breaks down below there. So we're in good shape on that short. And how much further can it go? Yeah, it can go all the way down here. These are places I'll add additional positions. And you'll notice the RL10 has gone summer, fall, winter, and now we're just getting ready to start this thing to collapse. And when it goes when it goes from fall into the winter, just notice how painful that thing is going to be. There's no evidence that anybody in Britain wants to save him, and he's trying to sell that company. They got nothing. Simon Property Group, another one that we're short, and we're holding a little bit here. I'm going to move my trigger alert stop to here. I don't want that to end up losing money. I'm going to give it one more day to fail, but we're still short. Let's see, Treasuries, long and proud to be long. Didn't have a good follow through day today though. So that's what we're holding that much gain right now against the yellow box worth of risk. So we're at about a 0.8 in hand. And I think I don't want to lose money. I want to make a little bit on it. So if it starts showing weakness tomorrow, we'll just cash it like right there. That'll be our alert. I'm giving it that much room to play. Still long. Tesla, watching it grind. Come on, rascal. I'm going to try to leaping ahead to Twitter. That's actually the one I wanted to show. Doggone it. Yeah, it's starting to lock up. All right, so we're gonna cease work on that one. The Twitter and the USO trades are worth looking at. I'm gonna refresh this one and see if that'll give us the that chart data back, and we'll shift to the intraday here. Stand by. Okay, let's go to. Okay, empty your bowl. We're going to start picking up the intraday stuff now. So our little hybrid orientation now shifting to our little bar by bar action. So let's take a look at what we have. We have a sideways quiet channel developed here in Brazil. So we've got our little opening range, something like this, and that's our Z1 to Z1 river. I'm going to show the Z2 to Z2 box because it's compressed pretty tightly. And we're into the day a little bit already, I guess. Yeah, because here's we'll just project the VWAP. So it's pulled back from the VWAP a little bit, but then stabilized. So that's that. We have a price. After this bar, the price pulled back right to the Bollinger Band main, right here. So price is sitting right on that blue line. And now we're going to do our standard hybrid trade frame. We're going to say, well, if it breaks out of the river at 1, maybe Z3 breakout, then above or equal to the VWAP breakout at 3. We'll say breaking out of this box sorry. So now we're building our logic chain. Here's the there's a Z. I'm going to call it a Z2 breakout. And then a Z3. The Z3 breakout would be our third possible entry to the downside. And so for those of you new to this, we know from the size of the range stat that if it breaks out of the sideways quiet channel, there could be a very powerful move still available. So our reward to risk ratio is already kind of built in pretty well. The fair value, the fair value is built into this chart in the form of this RL270 shows a reasonable upside target. The VWAP is certainly a target. So now if you go through those trade frame questions, you say, would I trade this long? Would I trade it short? Would I trade it either way? What would be my signal to go long if I was going to get long? Because remember, we're in the MACD histogram is in the summertime, because you can see that RL10 now looks green. So spring, summer. So there's some upside indication on this one. So I certainly want to get long. Now my question is, would I want to get long at 1 or 2 or 3? And if you want to get long, pick the price you want to enter at, and then pick your stop. Would it be, I'm going to call this 7. Seven would be if you got long at 1 or 2 or 3 and you wanted to be just underneath the dragon for your stop, then you would pick long 2 with a stop at 7. And then if you want to get short, it's really the same questions. Would you want to get short at 4 when it breaks down below the PSAR and the Z2 or the Z1 river, and on the Z2 excursion, or Z3 excursion, which also breaks that original PSAR dot right there? And then if you got short at 4 or 5 or 6, what would you use as your stop? 7 or 1 or 2 or 3? Okay, so on your trade log, go ahead and lock in your choice. And now we'll start. We'll zoom in on this guy a little bit and start learning as we go. Okay, I'll let you study that for a minute. And again, price is right here at the blue line. You can't see it on this next bar, but after this little excursion at 1, it pulled back right into the middle of this range, and it's sitting right on the Bollinger Band mean, right in this, right at that level. Okay. Let me get my stop ready. Okay, go ahead, lock in your votes, and now off we go. So I'm short right here. Your mileage may vary, and I'm picking 1 as my my initial execution risk. So that's how much risk I'm taking. Your mileage may vary. And I am out of this one here. And in my usual fashion, you will recognize this pattern as fake one, go two. So I'm just going to use the same kind of risk right here, and now I'm long. So what happened here was we had a sideways quiet channel. It broke down out of the river and started going south, and then it failed to fail further. And then as it crossed back above the Bollinger Band mean, I take this fractional loss. Just so we can keep score. So my actual net loss on that would have been like that red box. So about half of an execution R is what I've lost. So I'm just going to stack that over there. And remember, that's about a minus 0.1 R. So this is not psychologically damaging to me. It's just I anteed 2 chips and I got 1 back. So now I'm long from this second green dot right here. That's the stop and reverse. We'll say I got a bad fill. By this time, my stop has to go from here, and I see this little move, and so I'm going to put my no lose plus dinner for 2 right here as I'm making a second entry, like right there. And now I'm hoping to see it get all the way up here to the long-term fair value. Oh, that feels even better. Look how much more room there is to go. Hooray. Oh, I'm sorry. I didn't see that. It did hit right there. Yep. So basically, we made bank on that little piece from here to here. Now we are flat. So I'm going to clear the deck here real quick, because we will probably end up wanting to do some more work on this. So now let's take a look at what we got right here. Our VWAP has not even moved. If anything, it's just come down a little bit. So the VWAP is still right there, and our price is sitting like right here. And we've had a nice move up, and now it's rolled over. The volatility starting to decay. Summer has become fall. We've got the RLXD. The dragon has rolled over. I'm going to call that an unambiguous move. And the RL30 is just about ready to go. So I could make an argument that that this is the little region of uncertainty right now. So now we're gonna frame this trade about, do we want to take an owl? So an owl would be like right about there. A breakdown below the Bollinger Band mean would be there. And if it falls out of the river, it would be right there. So that's going to be our 4, 5, and 6. Let's see. As you can see, there was, I'm sorry, there was a lot of volume transacted today way up in this area. So there's a real strong, there was some strong moves up there before today already. So I'm going to look at, I'm going to call position number 1 as a breakout above the RL10. Call this trade a breakout above, I'm going to call it the, yeah, that feels about right. Like at the Z1, and then we'll play Z3. So our price is right there. I'm probably going to use that same yellow box as my breakout. So decide right now if you want to play long or short, or long and short, or which one first, if you have any preference one way or the other. I'm going to lock in my choices here, so you do same thing for you. I'm ready to play. Let's see. I think long at 1. I think if this thing breaks out, I'm going to move this up just a fraction higher. I want it to be, yeah, like right there. That feels a little better. I feel better. Yeah, so it's breaking above the, in that case, if it breaks above the VWAP and it's heading back towards all this other volume and fair value, I don't want to wait around too long. And the last big move was the summer. So I'm getting long at 1, and I'm going to get short at 5. That's where I want to go. And that gives me something like, yeah, that's nice. That's my little breakout box, like right there. So I'm long at 1, short at 5, and I'll split the difference on my like my execution stop would probably be something like that. Yeah. Okay. Long at 1, short at 5 for me. Lock in your notes. Yeah, looks like we're short here at 5. God dang it. There's my little execution boy right there. On the RLXD exit. So my actual loss is this. And this is here. So let me come down, bring this down. Crap, basically flat for the day so far. So now what we got going is a There was no follow through in either direction, so I took another micro loss. Now we're getting ready to make some new moves here. So the Z3s have pinched. So I'm going to set up a new series here. Whoops. Let me drag that. I still like 1, 2, and 3. 1, 2, and 3 to the upside. I'm still looking like 4, 5 is the PSAR, and then 6 would be a significant breakdown. So what we've got so far, and let's get ready to lock in your decisions. I'm going to stay with 1. I'm going to stay with 1 and 5. As my triggers, and I'm going to use half of that distance as my risk. So something like that. Okay, so make your decisions. I'm going to go long at 1 or short at 5. I'll use the blue line as my initial risk once it starts moving out in either direction. So record your trade on your sheet. So I'm long here with my stop right there. Whew. Let's see. Probably like that. I'm just going to take that right now, feel a need to get paid. So that's a green. Plus this one. So that's my gains versus losses so far. So the main point of this thing so far, you don't got to be right a lot, or even most of the time. But this is one where I want you to notice that there was those two bars that got out past. We had a Z3 excursion here, pulled back, pushed higher, couldn't hold, closed lower, made a lower high. So this actually feels like it's sliding down. And because I got two positions in on that one, I'm just going to grab that while I can. And now the question is, do you want to get short any of this? And where would you want to get, where do you want to get back in? Let's see. So let me lock in my gains, or lock in the trade here. This was all right. So that was that trade. That would be a breakout to a new high. This would be like a Z3. If it broke above the current Z3, and then I guess if you just wanted to get in again, I would let you do that, I suppose. The soonest place I could conceive of getting short, Skin of the Dragon, PSAR break. Let's see. If you were really aggressive, you could. I'll let you go nuts and try that. So that would be long at 1 or 2 or 3, and then short at 4. That's not even a pattern if you get short at 4. That's just you exercising belief. So a 5 would be price breaking below the dragon. 6 would be a PSAR break right now. And then you can, and now the target would be, or the argument is, hey, you know, the VWAP is going to act like a magnet. It's now 2:00 in the afternoon. There's still 2 hours left in the session. So you could decide to trade this one or just stand aside. And what you got is probably 0.6 R of position sizing out of that afternoon run. You know, do you want more? Is how much more is there? There was a lot of volume transacted up here before today, so there's still a strong reason why I could get to 3. So I'll let you lock that in. I'm going to make my decision here in about 10 seconds. My decision is I'm gonna stand by because it's that late in the afternoon. I don't see that much more, but trying to squeeze that much more out of it. I'm happy with that. But you can lock in your stuff. Shit. I mean, heck. Yeah. So there was still. So if you had picked one, you might have been finessed out here, but you'd have gotten a little piece. By this time, the RLXD you would have gotten out. So there's a possibility of another. Ooh, look at that, perfect. Another little possible brick, which you may or may not have gotten. So that's that. Now, in terms of the size of these, what we ended up losing was something like about 10 cents, maybe, or 8 cents. And then what we gained was up to 60, about 25 cents. So, 3-to-1 reward to risk on that little follow through. And I would say the secret, we were postured so that we had 2 positions in, and this one did not follow through. If you don't have that one in, like if you don't put that second one in, you might not have had such an aggressive stop. But I would tell you, you probably would have gotten out then when the PSAR hit over here. So you end up getting the same exit no matter what. But this is a really good entry, because remember you had a very brief winter, a rapid spring, and then went right back into the summertime as it was crossing the VWAP after a Z3 pinch. That's as sweet an entry as you could get. And to be honest, if I don't get this second position in here, that's the one that causes me to want to cash that right away. But if I don't have that position in, maybe I can tolerate this, and now I might have been able to enjoy that run the whole way up. So you never know which way you want to go. But still, that's a pretty good afternoon work on a single element. It took us about 20 minutes to work our way through that one symbol and making 4 trade frames. And that actually represents, 90 minutes of, so we're actually going that 4 times faster than things are actually moving. And once you get used to learning how to trade frame in this way, it goes pretty quick. So it's like 940. I want to show these other ones just kind of real quick, just to give you here's one. If you had exited a nice trade earlier in Brazil on an owl and it broke here, now the question is, do you want to get short when if it were to cross the VWAP here or not? So you might say yes or no. It turns out, yeah, hell you have. And now the question is, if you're short here, and you see this, this is your maximum favorable gain, but now the winter rolls up, and now you got a 1, 2, 3. I'm telling you right there, take that exit. When you see that kind of pattern, after the second leg down, right? You just had a nice run up in the summer, and it held on in the fall and broke down for a leg in the winter. And it gives you these 2 little horns at the bottom out at Z-2. And you're really close to that PSAR flip anyway. You can see that this is the discretionary range. So a 1, 2, 3 take the dragon spine or something like that and just make bank, because your reward to risk ratio on that is really good, because your stop is either here or the top of the RL10 and the PSAR. So one of those 2 is your risk reward. So this is just a lesson in geometry right now. All right. So if this was your risk, I'm going to make that darker so you can see it. But like if that was your risk, and then this is your This is your maximum favorable gain in green. You know, just think about this thing coming back up this vertical stack. By this time, look how much you've already given back. Now you're only holding this much gain. So you've just given back as much as your initial risk was. So keep most of it. Be willing to give it a little bit, but this is one of those cases where as you start getting this is a psychological or a geometry kind of a stop, or it's a 1, 2, 3 strike, right? And here's why we call that the 1, 2, 3. I'm going to make that even bigger. This is a crucial lesson. All right, so you had the maximum favorable bar came all the way down to here. Then it opened, couldn't make a new low, and then bounced most of that way back. 1. Then it opened where it closed. 2. Closed at the top of that bar. So this is now, when that bar closes right there at the top of that bar, what we now have is bar 1, bar 2, and now bar 3 is live. And the way we work a 1, 2, 3 exit is this. We take you just find whatever the top of bar 2 was. Sorry. That's the top of bar 2. And this is actually pretty easy because bar 2 closed at the very top of his bar, right? But a lot of times you'll see that where, bar 2 might have closed here, and then bar 3 opened like right here, and then starts cruising. So while bar 3 is live, as soon as it crosses above the high of bar 2, that's where you take the exit. You don't wait for it to close. That's where you take the 1, 2, 3 exit. Okay? So that's a 1, 2, 3 exit. Bar 1 is the bar that made the swing low. Bar 2 closes without having made a new low. So like if this bar, if this bar had opened and then made a new low, well then that now has become bar 1. But it didn't, okay? So bar 1 closes, bar 2 opens, and in this case it closed without making a new low. In this case it closed like way up in here. So that now becomes bar 2. So that's bar 2. And now bar 3 takes out bar 2's high, and that's what makes it a 1, 2, 3 exit. Okay? So you end up only giving back a fraction of that maximum favorable gain. So instead of waiting all the way up here for like an RLXD or the PSAR to get taken out, you end up taking this exit right here at 3. And then that makes a very favorable trade for you. Okay, so if you end up taking like this RLXD short, because you notice up in here it had those 2 bars outside Z2 and it couldn't hold, and then it starts failing, and it crosses the dragon, and now the dragon is rolled over, and this thing is rolled over, and this is where the owl entry is probably down here by this is down here in this cluster. So if you're front running that and you take the RLXD exit, you get a very tight stop. It fails more often than the owl, but when it works, you get most of what turns out to be a pretty favorable move compared to how much you were actually risking for execution. So then when it comes to the other end of this thing, instead of holding out for everything, you say, look, it made a 1, 2, 3, and it's already moved back off the low. The same amount of retracement that got me in, it's retraced down here. So just take the strike exit at 1, 2, 3. The 1, 2, 3 exit is a strike exit. That's a really good exit. That's the point that I wanted to make there. And then how fast can you get into the zero state? And then if you were ready to get long on this thing because of the previous move was up so strong, you might have actually gotten in at 6 and scratched. And then this gets us into that same trade that we just worked, but on a different time, different time scale. So there was an opportunity in there. So if we wanted to, that little quick hit right there would have netted you this much gain, and that's 50. That's almost another 20 cents, almost as much as we made in the rest of this afternoon trade that we just worked so hard on. See if here's another. Let's see. This was the earlier move in Brazil that created. This is the move that if you've got from the right from the open with the hybrid frog. So here's where it opened. There's about a hybrid frog box. So you end up getting long with your minimum manageable risk box. You end up getting long somewhere in here. You're not going to lose money on that trade. And with a little bit of good fortune, you either get a second position in right around here or here. Either one of those is a reasonable second position. But even if you don't, then this is where that strike exit works exactly the same way as we just described. And so you could reasonably have gotten that much gain. And that's 30 cents. So that chunk right there was as big as the other two complete trade sets that we did. Here's a speed run for you on this is a symbol that has clearly sideways quiet channeled, and then look at the distance to the VWAP. That's gonna, it's in the afternoon, and that's the price of record that people got to settle up, and you've got this incredibly compressed sideways quiet channel down in here. So if I just pick this as my my breakout, even if I get a little bit wider on that, let's say and if it breaks down, but the size of the move that took it down here, there was a time today when it was at the VWAP and it sold off that much. So if it sold that much, now if it breaks down, it could go that far. It could also go this far back to the VWAP. And so that's the argument. So as you're learning to look at this critical state hybrid frog Z3 pinch breakout, you end up looking at I just think this is a simple, healthy way to look at the. Imagine those were red. Come on, Kenneth. Okay. Um, so get that lens in your head. You should see sideways quiet channels in that way all the time. And especially when they're super pinches, like this one is. And then if you just think of this as kind of a like a 1, 2, 3, 4, 5, 6. And then I want you to realize that this thing is, if you play the Z3 pinch breakout, that number 1 on there is pretty. You could actually get him in pretty tight. Now, what's really attractive about this one is I want you to notice the sequence in the RL10s, and now notice the power of color coding these things to the MACD histogram season. So it's gone through a period of summer, fall, winter, spring, and now if it breaks out above 1, the Z3 breakout, heading back to the VWAP, this is going to quickly go winter, spring, and then hopefully through a long summer. And now when you look at the potential move, you can see that looks like about 1 to at least 3 to 1. And there's your VWAP move. And it does nothing but summer, fall, summer, fall, summer, fall, summer, all the way up. And for a fraction of a risk, you get a nice payoff. Oh, hell. Oh, hell yeah. How about that? So there's your potential reward. And that's assuming some kind of strike exit way up in here. And that MACD histogram is your friend. And the Bollinger Band mean never got threatened. So as long as that MACD histogram is in your favor and you got the power of that VWAP pulling you forward, you're in pretty good shape. And then when you see that thing at the end of a parabolic run like that, you can just feel it crack and hear it crack. And now it settles up at the end of the day by the VWAP. Even this last little bit of retracement was nothing more than a VWAP reversion. Look how much it had gotten that far away from the VWAP and came all the way back. Now, the other thing I want you to notice about the VWAP is this dotted line was the original projection. That really didn't vary the rest of the day. What that means is that all of the volume of this thing gets transacted early, and it's only the last few speculator guys that are hanging on towards the end of the day. And that means when they start exiting their positions, it's all at once, and all that leverage comes in, and it moves quickly because there's no other volume being transacted, notice the two different price levels where volume was transacted. This one down here, when it was in the sideways quiet channel for so long, then way up in here where it finally rocketed back to, it gets through this no man's land in the middle pretty fast. So when you see a Z3 pinch like that, you have an opportunity to frame a very low risk trade. And now the width of the Z3 to the Z3 is your strict minimum manageable risk box. I can't tell you how many times a week I see this happen. It's many. And that's why I love the Z3 pinch. The opening, you can make a strong argument why you like the opening 30 minutes and opening couple hours, but I'll tell you the afternoon trade. Here's another Z3 pinch. Another big blast. Once it breaks down, it goes fast. Spring fails back into winter. That's all you need to know right there. Right there. And then if you were waiting for the Z3 break out of it, then your move is there. Or if you're waiting for the next fail, it's right there. Or the next fail, it's right there. Or even this one, because it rejected at the break. Any one of those is legit. So I just say, hey, the Z3 pinch, this is the moment at which my uncertainty is at a minimum. The amount of risk that I got to take here is small compared to the risk if I was getting short at that one. Now I have that much adverse move, and it's a wider stop at a smaller position, and I'm gaining less. So I like the smaller initial risk at critical states. Here's right from the opening on something. OR5, there's my trade frame in either direction, and there's my first move. I'm not going to lose money on that trade, first 30 minutes. So those are the lessons that I want you to get today. It's this whole notion of when you get a change in state and you have strike exits, make bank, get used to just cash it and live with it. And then how quickly can you get back to the zero state and get the RLXD entries around 2 and not wait for the emerging dragons at 5? Because you can get paid fractions in here if you don't believe in the trade, if you don't pay an emotional and cognitive cost for that. That's what I want to say about that. Okay? So there we are. That's everything I got for tonight. I'll get this processed and hung in the usual way on Patreon. Some good lessons in there. We visited the market health check. We did a detailed look at the swing portfolio and looked at some trades that were good on the long side and the short side, and learned something about managing those trades bar by bar with end-of-day data. And we were able to go through about 50 symbols in 20 or 30 minutes. And then we did about took us about 50 minutes to go through 5 or 6 trades. And it'll go faster for you when it's your brain processing visually. What's taken this so long is that I have to say these words in complete sentences, and I have to draw the lines physically. But you can have that stuff pre-drawn and just drag it into position, and it won't take you near as long to implement those trade frames. Okay, so that's what I want to say. Take good care, guys. I will see you in the chat room. Keep up the fire. Keep up the good work. That's all I got.